What's happening, everybody? What's going on? Doc on the rocks. Let me put the music down here a little bit. Welcome, welcome, welcome. All right. We are recording, I think. Yeah, we are recording. I need to just say hello to everyone for a moment. Got some folks coming in from the waiting rooms. Great to see you guys here. Greg, what's happening? Is that what I'm pouring tonight? Well, it wasn't beer. It's my usual water. No, I'm a tequila guy, man. What am I gonna do? Can you guys hear me okay, first of all? And then I'll get to I got some folks coming in. Yeah, new camera angle. How about that, Carl, Arlene? So here's what I'm trying. I sit far too much all damn day. My hips are hurting. Um, Man, it just sucks. So I got a new one of these variable desks that kind of raise up and I can tilt my screen and so I got a second camera. So when I'm sitting, I got one camera. When I'm not sitting, I got another camera. I'm just trying to like vary it up a little bit. So I'm standing tonight, y'all. Um, so you're gonna see me from time to time just mixing it up a little bit. So I do have to get used to the fact that the chat box is over here on my right. Which is normally right by the camera. So if it's like I'm not looking at you, I'm looking at the chat box to make sure I get everything. That's the only thing I think that is a little new, but can you guys hear me okay? Because I'm using the microphone from my primary camera, which I think is much more clear, but I'm using the video from my straight on angle. You guys hear me all right? Okay, great. Awesome. So good evening, good afternoon, wherever you are. It is 5 o'clock in Southern California, 8 o'clock on the East Coast. So it's great to see you guys here. North Carolina East Coast users. There you go. Boise, Idaho. Very nice. Welcome. What's up, John? Oh, John's in Boise. John. I love that you just travel and you're like, hey, I got nothing else to do. Let's just hang out in Stocks on the Rocks. Let's do it. I love it. You always make time, and I love that. I appreciate that, John. 5x9 audio. What does that mean? 5x9 or 5 out of 9? Like it doesn't sound good. It's only like a 5 out of 9. No 10, no nothing. I'm not sure what that means. 5x9 audio. And then Thomasina. I thought this song said it's a bad day to be a beer. Nope. A bear. No, it's not a bad day to be a bear. I'm not sure it's ever a bad day to be a bear, but certainly Stocks on the Rocks, it's a bad day to be a beer. So awesome. Visiting mom for your birthday. That's fantastic. So here's what's something that what I thought was pretty cool, which I don't do, but I probably should do before we jump right in is what it wasn't my stepdad, but a guy that my mom dated for a little while after my parents divorced. He would send his mom flowers on his birthday. And I'm like, why would you do that? And then and then it clicked. As soon as I said, why would you do that? It clicked. And I'm like, oh yeah, because she went through all the trouble of making you. And I'm like, that's kind of badass. Um, yeah, I thought that was sweet too. So, I get it, John. I think that's awesome. I think that's actually really awesome. So good for you, man. I'm happy you guys are out there spending time together. Um, Mike, you made it. Good to see you here. All right, so let's just get this show on the road, right? So a couple things I want to say about tonight is I am standing. Um, that's the first thing. That's different. The second thing is this is Stocks on the Rocks. We do this every other week, generally every other week. unless there's some conflict, because I'm the primary driver of Stocks on the Rocks, which is basically an open office hours and a happy hour. We get to have a cocktail, and we get to talk about whatever you guys want to talk about. Meaning, I don't come planned with anything. So this entire session for the next hour-ish is designed by whatever questions, comments, concerns, wins, failures. You want to talk about trading? You want to talk about something entirely different? Let's talk about it. It's just an open office hours, a chance for us to hang out and just talk about stuff, right? So our trading rooms, which we have 8 trading rooms a week at TradersArmy, we come planned with things to talk about and trade and analyze and build and all that fun stuff. But this is not one of those sessions. It's after hours. There's nothing to trade unless you trade crypto, which I don't. So I don't know anything about that. But if you guys have crypto questions, I'm going to bring Herman in at some point and he can come answer those questions. But the length of this and the content of this, how deep we go, is really based upon what kind of questions, comments, concerns, and things that you guys want to talk about. You bring them, we talk about them. So this session is designed to be about an hour long. Many times I can go over, but tonight I will say I cannot. So I have to watch the time. My son, who is also a drummer, I have a drum set in the background. I don't know if you can see it or not, but he's a drummer in marching band. And he's got a football game tonight, and they are putting on their full field show, and they start at 7, so I have to head over and all that super fun stuff. So I'm going to pull double duty tonight. So help me watch the clock, because we have about an hour, right? And then I can head on over. Jason, how was Nine Inch Nails? I saw them back in 2009 when they played with Jane's Addiction. They were Nine Inch Nails. Anytime you go to see a Nine Inch Nails show, I've seen Nine Inch Nails probably 4 or 5 times, going all the way back to the mid 2000s. And they always have the most forefront of technology when it comes to their productions, and it was unbelievable. My oldest son and I went, and it was great. And they're coming back in January? No, I don't know when they're coming. Next year, they're coming back here again at the Honda Center, which is like 15 minutes from my house, versus the Forum, which is about an hour from my house. So we will be seeing them again. Same tour. It was like probably, I mean, it's up there with one of my favorite shows from a production standpoint. And my son thought so as well. Um, one of my friends, he's the drummer for Nine Inch Nails, so we didn't get to see him or talk to him or anything like that, but I'm not trying to bother people during their show day. But yeah, their show is just unbelievable. So we're a concert going family, especially me and my oldest son, who's a touring musician as well. So yeah, we go to shows all the time. And Nine Inch Nails was just unreal. Yeah, they put on some of the best shows, man. Some of the best shows, and production value is worth it. I mean, tickets aren't cheap. I mean, we paid what we paid. I think we probably paid a little over $200 a piece for the tickets, but it is what it is. Compared to, hmm, compared to, my buddy plays drums for Lady Gaga, and we were going to go see their show in Vegas, and his friends and family discount tickets were $500 for nosebleeds. And I'm like, yeah, we love you, but we don't love you that much. You've seen Josh with Vandals in Perfect Circle? Yeah, I don't know if I've seen Josh with Perfect Circle. But yeah, Josh and Jason, his brother Jason, who plays in Green Day. Jason's probably one of my best friends on the planet. And so that's how I know Josh. But yeah, we go to the Vandals concert here every year, their Christmas show at the House of Blues, and we sit side stage and we watch Jason and Josh and the rest of the guys. So yeah, so I just got my Vandals tickets a couple days ago for Christmas with the Vandals at House of Blues Anaheim. So yeah, oi to the world. That's right, Jason. That's amazing. I love that we can talk about this. I mean, it's not trading related, but I can talk about this stuff all day long. But yeah, yeah, we're going to Halloween Horror Nights next week. I think Josh is coming too. So yeah, we always go with the freezes every year, Halloween Horror Nights. And then we go to I mean, actually Jason, the keyboard player for Green Day, his his son Tennessee plays saxophone in the same marching band that my son plays snare drum in. So we're going to hang out with the freezes here in the next hour. So yep, so that'll be fun. Ever make it to the joint in Hollywood? I have not. I don't think. Maze or the joint in Hollywood. I don't think so. I don't think so. I don't even know if I know that name, Mike.
It's before your time, but it's where Dave Morgan in Chicago and remember I grew up in all that stuff with Linda Ronstadt and
Yeah.
Nelson there.
Yeah. Yeah. Well, Mike, you're from out here. Remember, I'm not. When I was playing music full time, I was in Orlando and and I moved out here in Cali, and so I'm in California now. So I moved out here in 2000, well, shoot. Let's call it, when did I move out here? Yeah, probably 20, 22 years ago I moved out
Yeah,
here.
ever get
So
a
yeah,
chance, go if it's I'm sure it's still open, but go up there because you never know who's going to play there. It's
you do never know who's going to play. You know what else is really fun is my kids actually shot a music video at Lucky Strike on Hollywood Boulevard,
yeah,
and they
I know
have
that show.
yeah, and they have these open. Well, it's not open mic, but they have these jam nights, and Glenn Sobel from Alice Cooper, Nuno Bettencourt from
Yeah,
Extreme. A
they're
lot of
doing
these
the
guys
same thing.
all. Yeah, yeah, yeah. It's kind of the same thing. So yeah, my kids, we were up there till about 10 o'clock last night. They shot a music video at Lucky Strike. And yeah, so it was really fun.
What a blast!
Yeah. I don't know a lot of clubs. I know a lot of I know some venues, but I don't know all the venues in LA because when I moved here, I wasn't playing a lot of music and I was kind of depressed that I wasn't playing a lot of music, I guess you could say that. And I didn't know a lot of people out here, so I would never make it a point. But now that I know a lot of people and my kids are playing music and so we make it a point to get out to a lot of shows. So no, that's awesome, man. And you grew up out here, so
Oh yeah,
I
all that
imagine.
up there. Back in
I'm
the
sorry,
day, I'll date myself.
back in the day.
Yeah, that was 15 years with Rick Nelson and Linda Ronstadt and
Yeah, no, that's amazing.
growing up and all that. Yeah, it's a little niche. It's all the little hole in the walls, the joint, the place you went. That's the places you go because everybody goes there so they can just jam with no stress.
Yeah, exactly, exactly. Which is fun, which is fun. So yeah, my kids are in a project right now where the owner of NRG Studios, which you probably know, Mike, are
Yeah,
is helping produce. Um, so they were up there shooting a video for that last night. So
nice. That's a blast. Yeah, they're all good people up there.
yeah, yeah.
I think
As
my,
much as I
my
don't like being in downtown Los Angeles,
no, I think my brother's still. I haven't talked to my brother in a couple of years. He's still playing out in Seal Beach and bounces around out there.
yeah, yeah. It's a lot of great places to play out here, that's for sure. No shortage of that. So yeah, so fun. So with that being said, we're 15 minutes into this and we're just kind of bantering. So with this, Stocks on the Rocks, this is again about questions that you guys have, things that you're running into. Let's talk challenges. Let's talk anything you guys want to talk about. And if we want to continue to talk about music, we can talk about music. But that's all. That sounds like a whole nother podcast, doesn't it? Not that this is a podcast or anything like that, but that sounds like a whole nother show we could probably
Good.
design.
You have life beyond trading. That's a good thing.
I mean, trading is cool and all. It's funny because, when I got into trading, I had just basically left touring and making music for a living, because it wasn't really making a living, for me. And I got into it. And when I moved out here and I left Orlando, which is where all my bands are from, and all the people that I still make music with today, just 3,000 miles away in my studio, um, I put my drums in storage and they sat there for a few years. And I said, okay, this trading thing is going to become my life and I'm going to learn how to do this. And this is my ticket to never having to have a real job type job. And to this day, I would argue that some things feel like a job. Like I run a mentoring team. TradersArmy, and I run a hedge fund, and those are job type jobs in a sense that they take up your time and you can't ignore them, and people are involved, and I love all that stuff, and I love where my life is right now. But there was a part of me that was always missing from the music standpoint. Um, and so now that I get to get back into doing it, I think that is it's I absolutely have to have music in my life. Otherwise, I'm a very different person, um, just in general in life. And so I think that you have to have something that you absolutely love. And I do recognize that my role as an income producer is a trader. However, I don't I don't like when people ask me what do I do, and of course, what do I do for a living is what I trade a hedge fund, all that kind of stuff. I don't make a living playing music, but through and through, heart to heart, every cell in my body is a musician, and part of my DNA is music and rhythm. And part of me thinks that, and I know a lot of musicians who do really well at trading. Um, and I haven't cracked the code on it yet because I haven't really gone too deep on it, but there is a rhythm to the way that the markets behave. And I do think that there is something that creatives and musicians tend to gravitate toward that can actually lend a positive benefit to something as, I don't know what you would call trading. It's not stale, it's not mathematical, it's not anything, it's not that at all. But I do think that there is a rhythm that the markets that once, and I've been trading for almost 20 years. January, it's going to be 20 years since I started my first class in trading. And I do think that there is a rhythm there that you start to kind of attach yourself, that you can sense that is, if you're a mathematician or if you're a civil engineer or if you're I think that there is an art to it that an artist can take to that a little bit faster than others. Um, and so, but that doesn't like the trading thing and the art side of trading doesn't fulfill me in any way, shape, or form other than financially. Um, and so I have to have music. I have to, which is why I'm blessed to be able to do it, and have a recording studio to be able to make music and release music and distribute music and all the things that comes with music. I'm not going on tour anytime soon. I don't think I can pull that off for a lot of reasons, but I do think that you know your tra actually, from a psychology standpoint, I think your trading will benefit if you can lean into your passions and what really makes you you, and not ignore the things while still making space for trading and learning how to trade and all that stuff. So I think there's a space for that. And I spent many years just focusing on trading, and I'm glad I did. But there was a huge hole in my heart, that I just could not get from trading. And so music is fills that hole. Obviously, family fills that hole, all those things. Um, but yeah, so to have that balance, I think is really important. And you're right, Ariel, there is an art to being a good trader. We try to put all the science and behind it, and the charts and the zones on the chart, and everything we could do to build probabilities in trading. And I think all that's really important because we need risk management, we need reward management, we need probabilities, and we need to stack odds, period. All that's really important. But then there's an art to reading the chart as well. And there's a feeling that I think we all get. And I was just talking with a student that I was mentoring today. And I was like, have you ever heard the statement, your gut knows what your brain hasn't figured out yet? And I think that gut, that sense of, oh, there's a rhythm here. I can't explain why I like this level, that I want to buy at. I mean, it kind of looks like a sloppy demand level or a sloppy supply level. I can't explain why I think this thing is going to go up, but it just feels like it's going to. And then I'll be damned if it doesn't do it. And, sometimes it doesn't, obviously. But, it does it. And you're like, man, I can't believe I didn't make that trade. Or I'm so glad I made that trade, even though it made no sense technically. I'm so glad I did. Yeah, there's an intuition there, and there's a gut intuition to I think a lot of things that we have in life. And I think that oftentimes we need to obviously focus on the technical aspects of trading. And, the technical aspects of trading allow us to place proper entries, proper stop loss placement and target placement and target two placement and all the things that come with managing a trade, which is managing a situation you're in. Um, but there is an intuition and there's a gut that you should not ignore. And sometimes you can back it up with the technicals on the chart, and sometimes you're just like, I don't know, man. I just kind of feel like this is going to do this thing. And and a lot of times when I have this feeling of, man, I don't know, I feel like it's going to do this thing, a lot of my trades I'll build with a defined amount of risk, and I'm like, I'm going to give it a chance. And if I lose all the money, I'm fine losing it. It's a small amount of money relative to the portfolio size. And if it hits target, then it's, 2 to 3 times the reward potential or more, or the risk, in terms of reward relative to risk. And if it's wrong, then I'll accept it because my maximum risk is what I pay for the option trade. And there's definitely an intuition and a gut that I lean into, and as best I can, as often as I can, I try to support that by the technical aspects of trading, which we all know: support, resistance, supply, demand, indicators, oscillators, all the things that we may use to stack odds in our favor. But but yeah, I think there's definitely something to the creatives in this world, not just musicians, but the creatives in this world can just, you know, we have this sense of it doesn't need to be perfect. It needs to just kind of give me a little bit of a sign. And that's something to lean into, which is very difficult, by the way, which I do think that why a lot of folks who are in their line of work are like civil engineers, for instance. You build bridges, you build buildings, and you cannot afford to fail. You have to know every possible outcome and every possible failure point, and you can't afford to be wrong. It's the last building or bridge you will ever build if it falls, right? But I think pilots are kind of pilots and the creatives of the world tend to make really great traders because pilots have a checklist, and the checklist is laminated. And if anybody's a pilot in the room, you can chime in on this. I know, John, you're not a pilot, but John, works with pilots all the time. You have a checklist, and you go on that checklist, and if any one thing on that checklist doesn't check off pre-flight, you don't fly. It is what it is. You don't fly. You fix it. You get maintenance crew out there. You get a different plane, whatever it is, you fly. But even if everything on that checklist checks off, there's still no guarantee you're going to take off and make it to your destination. So you have faith that you've run your process, and this is the best we could do. We have to fly. And I think trading is a lot like that. So you take somebody who's process oriented, like an architect or, a civil engineer who builds things for, and then you take a pilot and they're process oriented, both of them, both very process oriented, but one has to take a certain leap of faith, that after their process is run and their due diligence is done, that this is going to work out. It's not. And the not for a pilot is pretty bad. The not for a trader isn't that bad. But traders understand the idea of, we've done all we can. Everything checks out. If I don't back, if the boarding doors are shut and the tower says you're good to go, you have to go. It's not like you have a choice to go. You just have to go. And so they're like, okay, I've done everything I could. Here we go. And that's why I think pilots make really fantastic, or people in that same line of work where you have process oriented, yet faith that your process has been executed properly. I do feel like folks in that area seem to do really well, really fast in this business. And I've had process oriented individuals that cannot afford failure in their business line of work struggle very hard in this business because you're gonna lose on trades. You're gonna lose on trades, 3, 4, 5, 6 trades in a row sometimes. and certain personalities just cannot deal with that. Um, so if you can't deal with that, it's very difficult to stay in the business of trading if you have a few, losing trades in a row, which obviously psychologically we need to coach through that and work through that and mentor through that and all that kind of stuff. But yeah, it's amazing how our personal lives and our personal career choices actually align with our personalities, but then also how they could either really benefit or really be a detriment to your trading career. So all things that as a coach and a mentor and the position that Chuck and Herman and I are in at Traders Army, all things that we have to consider when dealing with individuals and helping them to try to achieve their, financial goals through trading. So, and pardon me if I'm not looking at the camera the entire time because I'm watching the chat box as well. I think I mentioned that, but now I'm starting to sound like Dr. Woody. Man, I haven't heard from Dr. Woody in such a long time, but he was so good. I liked listening to him. Have my commercial, but haven't flown in about 5 years. Yeah, so you know what I'm talking about, John. Which I actually think, John, I don't look over your shoulder in terms of I don't have access to your trading account or anything like that. But I do think that if I were to look at you as a trader as a whole and knowing how you behave and how you execute and what I do know about you, you probably resonate really well with everything I just said about how a pilot has his checklist or his or her checklist. And it's like, well, this is the best I could do. And all I have to do is do this because this is the best that I have. And everything is pre-planned. And if the worst happens, the worst happens. But all the odds are stacked in my favor that the worst won't happen. So I think that your sense of investing and trading probably is not only, from what you've learned in just trading in general, but if you apply that same methodology that you do from flying, even though you haven't flown in 5 years, you could probably say that, yeah, that's exactly how it is. We do the best that we can and we have a checklist. And if the checklist says fly, we fly. If it doesn't, we don't. And I think that's probably why you are as good as you are at trading and investing is because you have that sense of, yeah, we've done the best that we can. Everything checks off. We got to go. Maria says, I think the problem is when you're a professional, engineers, etc., they're outcome focused. So that fear of being wrong kicks in most of the time. 100%, Maria. I would 100% agree because certain industries and certain careers, you can't afford to be wrong. You're wrong once and your career's over. With trading, that's not the case. With flying, it might be the case, but with trading, it's not the case. But yeah, there are certain industries where it's like if you're wrong once, yeah, you're done. And that'll freeze people, right? That freezes people from making any decision at all. Mike, as a follow-up, faith in the process and backed by the stats you've accumulated. That's exactly right. Right. The takeoffs are the only optional maneuver. That's so funny. Yeah, you're right. Um, Thinking in Bets by Annie Duke. Such a good read. Maria, I haven't read that. Bets by Annie Duke. I have not read that, but I don't read, but I listen to audiobooks. I mean, I know how to read. Let me just state that. I do know how to read. I read like 5 lines. I'm like, what did I just read? So audiobooks are good for me. Bets. Is the name of the book Bets? Is that right? Bets? Thinking in Bets is the name of the book. All right, I'm gonna take that. Thinking in Bets. I'm gonna make a note over here because I like checking stuff like that. Thinking in Bets.
I like that, Corey. It's good. It's all a mindset. That's what I've come to learn. It's all mindset.
It's so funny that, so many in Traders Army, I guess, is the same way to a certain degree. But I think because this is where everybody's trying to refine their skill. But I do think that probably 80% of trading or more, Annie Duke is the name, is psychology.
Yeah. I've spent the last 2 years in a psych program.
Oh,
Not
you
that I
spent
was
2 years in a psych ward, did you?
in a psych ward, yeah. To go because in sales, I'm all you. Well, you know me. I'm sales oriented.
Yeah.
I'm sold over 200 million in sales. It's easy.
Yeah.
This is not sales, and I can't sell the charts. I can't sell the market. And
Nah, market
it,
doesn't care what you're selling.
no, it doesn't. It is a binary situation. What I've learned over the last 2 solid years of grinding is it's process driven and accepting the fact that the ego now is gone. So the ego's gone. It's process. You have an edge. Work your process. What are your stats telling you? And you're right. It lines up. Must take the trade. It fits the rules. I now take the trade. Whereas when I was
Yeah.
trading before, it was all gut. I could see it. When you talk about the artist side, I mean, I loved when the volatile markets were going on. I was nailing home runs, thinking I was right. No, I was lucky. But
And
it's
I'll
your
take luck all day long. Sometimes we get lucky.
yeah. I won't argue. I'll take a lucky one, but it's got to be part of the process now.
It's got to be part of the process. Yeah. Yeah. No, that's amazing. I love it. Let's see. What do I got? I got a lot of stuff in the chat box here. Let me make sure I get through it all. So, um, good. I appreciate the book. Greg says, Corey, I like hearing both you and Chuck saying, I don't hate that trade. Yeah, it's funny because when Chuck and John and I, who run Mainstage Capital, which is our hedge fund, one of my lines that we've learned to just kind of joke about is, I don't hate that, is sort of the high praise. Everybody says, well, that's high praise from Corey. I don't hate that. Um, and so, yeah, it's just kind of funny. I don't hate that. SK, yeah, as a surgeon. Okay, yeah. So surgeon is one of those industries where like you can't afford to be wrong. You'll kill people if you're not if you so it is a struggle, and I get that, right? But also in your line of work, I think that there is a creative aspect to your world as well. I have several friends of mine who are doctors and directors of hospitals, and they've run their own practices, and their own practices have been run out of business, and now they work for bigger institutions. And there is a sense of I'm relying on my training from school and college and the ongoing training they get. Um, but there is still, I think, if your mind is open to it. Now, mind you, I know doctors who their mind is not open to anything outside of what they were taught. That's dangerous, I think, in not only the world of medicine, but also the world of trading. But I do know that doctors that I know, and this could extend into surgeons as well, that are like, yeah, I know this. However, I've seen this, and that's where the creative aspect of things go. And my son, it just reminds me of a conversation. I don't know if you love it or hate it, but my son has just discovered about 3 weeks ago the show House, which I'm sure most of you know the show House. I don't. They don't make the show anymore, but that's an example of a person who knows medicine, who knows the body, who knows things, but he thinks as a creative. And I know it's a show. I know it's TV, right? I know it's TV, but the way that he thinks about attacking problems that his patients are having is the creative side. And so I know that SK, you have a creative side. You almost have to in a surgical environment because you're going to run into things that your book can't prepare you for. So the more you lean into that creative side, the better surgeon you become, I would like to believe. But then if you just accept that into the trading side of things, the better trader you could become as well. My son said never take him to see him. No kidding. Surgeons definitely have to be creative to make things work in surgery. 100% have to think outside the box. There's a reason why it's called the art of medicine and not an exact science. I like to say it. This is the reason why I think it's called practice. You're practicing medicine, right? Right. And so I actually think that you're in a good spot, SK, because you have the process orientation of here's what should be, says all the books in my training. But when things get derailed, I can be creative also. And so I think you're actually in a good spot. The only issue I think you have, and I'm going to say this, it's very blunt, and I get it. If you're wrong, somebody might die. That's hard, right? And I get that as a surgeon. No one's dying trading, right? So there is that psychological work that I think would be really, important to just kind of come to terms with. It's like, well, nobody's dying in trading, right? And I say that very bluntly because it's true, I think, right? So, and I don't, so I think that you have everything that it takes to be a phenomenal trader with your book oriented stuff, your training oriented stuff, the creativity stuff. It's just about saying, okay, in trading, no one's dying here, right? I get your position as a surgeon because that's really fucking serious, right? Really serious. You cannot take that lightly. With trading, you can have that flexibility of being lighter about that because, and I don't want to say it's only money, but that's why we have protective stops. That's why we have, especially in options, we have option spreads, which limit risk and define risk. And so I think if you could lean in, if you could just say, okay, this isn't surgery, this isn't somebody's life here. I understand the aspects of the technical side of what we're doing, but the creative side is, I think, where you're going to find your peace and your home in trading when you combine the two, right? So I think that's actually, I think you're the type of person that, if you can get over the fact that, no one's on your table, and their life is at stake, I think that you have the makings, like the DNA, and you're engineered to do really well in this business, SK. I think your line of work actually engineers you to be really good at this business. As long as you can separate the two. This is not trading, right? This is trading, this is someone's life. But there's not that big of a difference. So I think if you can separate the two, um, I think you're really well positioned to do really well in this business. SK, I don't know, SK. Are you a Traders Army member? I don't know. Do we hang out often in the trading rooms, or are you not a member at this point? I'm asking because I don't recognize all the usernames in the room with us right now. It's okay if you're not. I'm just curious. I'm just wondering who I'm talking to here. Because if you're in the community, then I mean, whether you're in the community or not, I give a shit. I care. But if you're in the community, these are things that, on a day-to-day and week-to-week basis in the trading rooms, I can kind of speak to. SK, was. Okay, cool. Awesome. Um, haven't traded in a while. All right, I get it. Coming back to trading. All right, good. Well, let us know how we can help, man. I mean, we're here to help, of course. Hey, give me 1 second. Give me 1 second. My son's calling in, and when your kids call. Hey, sorry about that. Um, when your kids are out of the house and they call you, it's just like, why are you calling me? Is everything okay? Um, everything's fine. But thank you for that. All right. So, yeah. So that being said, yeah, if we can help, then yeah, I love helping, and we'll keep an eye on that kind of stuff too. All right, SK. Let me make sure. Well, user, just user. All right, user. Aren't we all users? When will the pattern day trader rule be changed? Um, and what would be the effect on the market or brokerage industry? Oh, it's Philip. What's up, Philip? You signed it. Yeah, I don't know. I mean, I don't even know if it's up for debate whether it's going to be changed. I heard a little rumblings about the pattern day trading rule getting abolished. And if you don't know what the pattern day trading rule, it means basically this. And I don't know when it was started, but I suspect it was started back in the 90s, like the late 90s, early 2000s, when an unimaginable amount of people were day trading tech stocks in the tech bubble, in the tech boom back in the late 90s, and buying stocks on an enormous amount of margin. And when everything fell apart and crashed because, tech companies that didn't have any sort of product or earnings or anything like that, and when the whole thing blew up and the tech bubble burst and the NASDAQ fell 92%, the NASDAQ fell in about 2 years. An enormous amount of people were margin called, and they were responsible for coming up with how much money they lost that was beyond their own account values. And how do you pay for that? So if you lose all your money, it's not a big deal. But if you lose your broker's money, it's a bigger deal. And the broker tends to want their money back within the week, usually about 3 days. And if you can't get that money because you don't have it liquid, then you have to put it on credit cards. And that's what people were doing at 18% interest rates back in the early 2000s. And so I suspect that rule was built off of that disaster. But the pattern day trading rule is this. It says if you don't have $25,000 in your account at least, then you're limited to 3 day trades in a 5 day period of time. And if you make more than 3 trades in a 5 day period of time or attempt to, your account will be locked and you won't be able to make any opening trades, only closing existing trades unless your account is above $25,000, or you'll be stuck in that pattern day trading rule account for 90 days or maybe even more. I don't even know the rule on that. But essentially, it means that if you get stopped out of 3 trades, it's one risk, right? You get stopped out of 3 trades in a week, and those are considered day trades, your account could be locked for any new positions. And so that's frustrating for someone who trades with a smaller account, right? Day traders can't trade. You get stopped out of a few trades in a row, and it's frustrating. Your account gets locked. And so what do you do in that scenario? Well, you have to deposit enough money into the account to get above 25,000, and then you can day trade as often as you want. And you didn't probably even mean to day trade. Um, and so when will it be abolished? I have no idea. I have heard rumblings of they're going to try to get rid of it. Sounds a little dangerous, but I don't know how close we are to that, so I don't know the answer to that. But the effect on the market and the brokerage industry, I suspect that from a brokerage industry, that brokers are going to make a lot more money in commissions, especially if they're trading anything other than stock. Like now, stock doesn't even have commissions anymore, so you can trade as much stock as you want. But I do think that the brokerage houses that sell their order flow and they're not direct access brokers are going to make a shit ton more money because anytime an order comes in and they sell it to an exchange to fill it, they're going to make money off selling that order. So I think that'll be a very positive effect for brokers from a financial standpoint from that perspective, but that could also, depending upon how much margin leverage they're giving their traders, that could also end in disaster again, if and when, which I'm sure it'll happen at some point, the market comes crumbling down. So I suspect that's going to be probably the major effect is when probably the biggest effect is, yeah, when things come crashing down and folks are margined without having the pattern day trading rule. However, it also depends upon how well day traders have managed to adopt stop losses, risk management, all those things. I mean, it's hard to say because if we're talking about a world now where we have protective stop losses that can be automated and you can manage your risk to a certain degree as long as you're not getting price gaps beyond your stop loss. I think that educators are a bit, I think, sorry, traders are a bit more educated, I would think, or should be today, that something like that wouldn't be a complete disaster, which I partially think might be a reason why they're considering abolishing that pattern day trader rule. Um, but yeah, I think that, I mean, that opens the door for more volatility. And I think that the folks who are day trading today aren't necessarily people. Sorry, let me back up. I think the people who are day trading today that are affecting volatility in a major way aren't people. They're machines. They're high frequency trading machines that are backed by institutions that have the money and they understand and apply risk management. So I think for most of us, if they had just abolished the pattern day trading rule, I think it's probably not going to result in much at all. And I do feel like folks with less than 25 grand would probably appreciate it. And as long as they're educated on risk management, I think it could actually be a good thing because the more money that moves in and out of the market every day would create volatility, which as traders, we like volatility, predictable volatility, that is. So I think it's a good thing if they get rid of it. But, for those who are on the wrong side of it, when the proverbial shit hits the fan, if you have not educated yourself on how to better manage your risk in that, then it is what it is. If you're margin called and you owe money and you got to put it on your credit card to pay for that margin call, well, we warned you. And I'm not saying we as in TradersArmy, the entire world, like we are a small educational company in terms of how many people are out there in the world teaching. I do believe that we don't embellish or exaggerate on what the possibilities are. Oh, you're going to make $10 million and drive a Lamborghini. Oh, you're going to lose all your money. Or, oh, you don't have to risk anything. We don't embellish on things like that. We are very transparent on how hard trading can be, um, and how important risk management, education, training, mentoring, reward management, all that stuff is. And so if you're properly educated, shouldn't matter. If you're improperly educated or not educated at all, you might get screwed. However, if I were to try to fly a plane without proper training, I'm also screwed. If I try to scuba dive without proper training, I'm probably screwed. I think there's a lot of things. They don't want you to be educated. That's probably true. Institutions probably don't want you to be educated. I mean, I think that's probably true. But I mean, there's no way around it. There's a million education outlets. Um, and I know that we're not the only one. I'd like to I brag on the fact that I think that we're probably one of the more transparent ones, in the sense that we don't market unbelievable upside with little downside. Like that's a lie. Um, you can have downside. You're going to have upside, but you can have downside. And this whole idea that it takes, no time at all and almost no effort, like that's bullshit, right? This is a real career. I mean, 4 to 5 to 6 trillion, not even counting cryptocurrency, $5 to $6 trillion trades hands every day in the global markets. You think with a couple of YouTube videos that you're going to pull this off at a consistent level for the rest of your life without real education and training? I think you're delusional. Um, And people can get lucky for a window of time, but that luck will run out, and it's a hard lesson when it runs out, right? So, I mean, I'm all for training, but I'm also for transparency, and I will be the first to tell you, if this were easy, everyone would be doing it. It's not easy, but I will say it's worth it. 1,000,000%, it's worth it. Um, so yeah, Ariel, true that. Not easy, but it's worth it. Thank you, John. John says, unbelievable access to your mentorship, best I've ever experienced. Thank you, John. It's the only one you've ever experienced, but I appreciate that. I'm teasing. You're the only person I've ever known. It's great. No, I'm teasing. No, John, I appreciate that. But yeah, also, John, knowing you and talking with you and um, you put the work in. So it's not just us. I mean, we can only take you so far, but you have to put the work in. And a lot of you in here are members, and you guys I can put the work in, man. So I'm proud of you guys for sure. You guys make it work, right? All right. So, there was a question here that I wanted to let me go back in and look at. And it was a question. I haven't even shared a single screen yet tonight, which is amazing, but I love the conversation. All cameras. I see. Those with 25,000 have better judgment. No, those with 25,000 have more money that they can afford to lose day trading. I wouldn't be surprised if that number went to 50,000 in the next crash, right? And Mike says, seems like they would require us to have more margin in our account so they would limit their exposure. And Mike, they do actually do that. So you'll notice, Mike, that if you're in a position where you're buying stock on margin, and let's say out of the gate you get 50% margin buying stock. If the stock becomes highly volatile in the wrong direction, meaning downward, they will start to tie up more of your money. And they'll say, whoa, whoa, this shit's getting crazy. Let's tie up more money. Um, Selling puts, which we do a lot of at Traders Army in our Wealth Essentials program. You'll notice that sometimes they tie up 10, 12, 15% of the notional value of the position. And then on some stocks, they'll start to tie up 80 to 100% of the notional value of the position. So they will tie up more money and they want more money. They would like for you to have more margin if things are going well in the world and in the market, but they will pull that margin in a heartbeat. Um, which is why, one of my general rules is if I'm in a margin situation, meaning I'm buying stock, which is rare. But if I buy stock, more importantly, I'm selling naked puts or things like that on margin, that I don't use up 100% of the buying power in the account. I will use 60% of the buying power at most, 70 maybe, depending upon the market environment. But if things get really hairy and things start crashing down and kind of falling sharply, the broker has full permission to start tying up more money in those stock and option positions, that stock and short option positions that are undefinable risk. They'll start tying up more and more money. And then if they want to tie up more money than you have, that's when they'll say, "Up, you don't have it, start margin calling." And they'll start liquidating positions regardless of your tax implications, your loss implications, all of that. And they will start to just liquidate positions if you've gotten too deep in terms of using too much margin. So it is something to be mindful of, that if you're selling naked options, which I'll sell naked puts all the time. I won't sell naked calls, but I'll sell naked puts. Um, and I'll own stock from time to time, but I'm also mindful that they can inflate the margin requirements, and I need to leave room in the portfolio as far as free cash in order to compensate for the additional margin requirements. And then if things start to get really close to like, oh, I'm almost out of buying power, then I'll start to look at what positions can I liquidate um, ahead of a margin call that I can control so that the broker doesn't have to take over. They don't like that stuff. Users, I feel like there was another question I missed in here. Maybe I missed, I got deleted or something. It was regard. Oh, here it was. User. How many trades do you make as an active trader? Per month? I, well, it varies, but I usually make about 30 to 40 trades a month as an active trader. But those are intended to be swing trades, not day trades. So I'm selling puts, buying call spreads, buying put spreads, selling put spreads, selling call spreads, and those are expected to last a couple of days at at the shortest end of the spectrum to maybe 3, 4, 5 weeks. But I'm usually in about 30, and I'm going between a bunch of accounts too. So like some accounts may only have maybe 15, 20 trades a month. Some accounts might have 10, 15 trades a month. Some accounts might have 30, 40 trades a month. But more than 40 is a lot. Like that's unusual. But these are also swing trades, not day trades. If I were day trading, you probably make 3 or 4 trades a day, which is a lot per month. Uh, okay, so user also says, should each position be the same size in terms of buying power reduction? If not, how do you decide when to be smaller or larger? That's a fantastic question. So here's the first time I'm going to share my screen, and I do have to watch the clock because I'm getting right at the top of the hour. But let me just go ahead and say this. So it's a great question. It's actually a question that came up in one of my mentor sessions earlier today on Apple. So Apple is a position that is poised to break out to the upside, but because it's got this rally basing near this all-time high resistance to the left over here on my weekly chart. So if prices break out to the upside, it is poised to break out. But I've been watching this 238.28 area as an area where if Apple pulls back, I'd be an interested buyer in this area of demand with a target of 256 if it pulls back from here. So entry price 238.28, stop price goes below 232.79, target price 256.52, which may be adjusted. So if Apple goes up and then comes down, I may adjust that target. But the hourly time frame will show why I put my stop down here at 232.79, which is below my primary demand area, but also below this little bit of basing right here below on a 1 hour chart. So I have a little bit of a stop that goes from 238 to 232. So that's about a $6-ish risk and change. And so the question of buying power, so I don't think that it's a good idea to base your position sizing off of how much buying power it's going to take to be in the position, because the amount of risk you have in that position is determined not by how much buying power you allocate, but what is the difference between where you enter 238.28 and 232.79, which is a stop loss. That there alone, where I want to buy and where I'm proven wrong, where I want to sell, is what should dictate your position size. And so, if you were to look at, and I have a little calculator here that I will bring up real quick. Hold on 1 second. And so if I were to take, I'm going to minimize this a little bit over here to the left. So I have a risk reward calculator over here. So I'm going to use my entry price of 238.28 entry, stop 232.79, target 256.52, all objective. I'm not going to have a target two. This tells me that I'm risking $5.50 to make $18.24, which is a 3.3 to 1 reward relative to risk as a ratio, which is good. It's great. Love it. So here's how I would suggest consistently position sizing is you define how much risk am I willing to take between my entry price and my stop price, right? Getting in, getting back out for a loss. How much risk am I willing to endure if I get stopped out of that trade and I'm okay with it? And that's usually going to be a small percentage of your total account value. So as a for instance here, if you had a $10,000 account, your risk tolerance might be 1%, as an example, $100, right? So if you had a risk tolerance of $100 and you're risking $5.50 a share, you can afford to buy 18 shares of the stock. Okay, and that's it. Can't buy any more. Now, 18 shares of the stock times $238.28 is a $4,200 position. So now, obviously, in stock, it gets a little bit difficult because you could run out of money if you don't have a large account, because that's pretty much half of a $10,000 account. But the risk is only $100. And the reason it's really important to focus on risk tolerance is if you were to have 10 trades and some between the entry and the stop loss were risking $100, and some were risking $20, and some were risking $50, and some were risking $75, and some were risking $10, and some were risking $25, you have an inconsistent amount of risk per trade. Inconsistent, right? Which means if you're shooting for 3 to 1, that means that this first trade stands to make $300. This first trade stands to make $60, 3 to 1. This third trade stands to make $150. I forget what that number was. Let's say that was 20. $60 in reward, $30 in reward, and $75 in reward, right? Now, I know my handwriting with my mouse is sloppy, but if I were to ask you this, hey, you've got all your money allocated and you've got an equal amount of dollars allocated to all these positions, but your risk is different based upon your stop and your target. I would ask you, which of these trades would you prefer to lose on? And which of these trades would you prefer to win on? And you say, well, if I were going to lose, I'd rather lose on the smallest losers, $20, $10, $25, $20. And I'd rather win on the biggest winners. That's what you would prefer. Problem is you don't get to make that choice. You get to make the choice of what you're willing to risk and what you're willing to make if you make the trade in the first place. And so Murphy's Law would suggest that I know you want to lose on the smallest losers. Murphy's Law would say, ha, screw you. You're going to lose on the biggest losers. And you're only going to win on the smallest winners. And that does not promote a long-term profitable strategy, right? What I want to see, regardless of how much money is invested in each position, is the important part. How much money is invested in each position? I would like to see, if you're willing to risk $100, if all of these risked the same $100, 10 trades, I know it's not 10, but let's say I had 10 trades here. If they all risked 100 to make 300, and I asked you, hey, which one, user, do you prefer to, which ones, if you're going to lose on 60% of them and win on 40% of them, which ones do you hope to lose on? Which ones do you hope to win on? Your answer should be, I don't care. They're all the same to me. Doesn't matter. Risk is $100 on each trade. I don't really care. The reward potential is $300. I don't really care. If you're saying the outcome based on my skill and probability is going to be that I'm going to win on 40% of these trades and lose on 60%, I don't care which ones I lose on or which ones I make on. I mean, think about the sense of peace that that brings, right? If you have a defined entry and a defined stop loss, and you say, hey, listen, I don't care which ones I win or lose on. They're all the same to me. That's what I want to see. So regardless of how much you invest in the position, I don't care. It's how much are you risking in each position. And as long as the risk is the same across all of your trades, that's a consistent data point. That means that your reward potential in every trade should be at least the same or better. And then you say, I don't really care which ones I win or lose on. Makes no difference to me. I don't care. And imagine how much peace that brings, right? That's right. It's probabilistic mindset and it's a reduction in stress. Yeah, it's fantastic. So it's not about the dollars allocated, it's the amount the dollars are at risk. Does that make sense, user? I say user because that's what you're called in the system. And thank you, John. It is 6:05. I do have this one last thing. That's good. And then two more questions here. Thomasina asks, is the mentorship on the website, is it the one-on-one consulting? That's right. Yeah, Thomasina. So mentoring at Traders Army is always one-on-one. So let me actually state here for a second, as a pro member, which I will say, I'll type it in the chat box. Actually, I'll type it on the screen here as I'm closing. If you're not a member, use the promo code TRADER60, and that will, if you're not a member, that'll take 60% off of your first month's membership to Traders Army, which is normally $149 a month. That'll bring it down to $59 for your first month. Check it out. Hang out with us. If you want to continue, don't cancel. It'll just renew at the normal rate. Or if you cancel, you cancel. It's fine. But the mentorship at Traders Army, and I'll say that's for membership, and that's all group stuff. We have 8 trading rooms a week, 50 plus hours of on-demand content, a lot of downloads, checklists, a lot of stuff to help keep you safe. But the mentorship is specifically one-on-one. So what we do under one-on-one mentoring is you can see what one-on-one mentoring can do. And then if you want to purchase one-on-one mentoring, you can do that. This is all one-on-one. You have myself, you have Herman, you have Chuck, and you get to choose, hey, I want to mentor with Chuck, I want to mentor with Herman, I want to mentor with Corey. And we'll talk about, we'll dig into like who does what and what on, all that kind of stuff. But you can actually bank hours. And so the more hours you enroll in at one time, the lower we offer a financial benefit to that, of course, right? So 1 hour at a time, 90 minutes, 3 hours, 20 hours, 50 hours. So you choose, and that's all one-on-one, Tomasino. Great question, though. And then Ariel, you said you don't sell calls. What do you do? What do you think about ratios like one call, buy one, sell two? Well, so here's how I feel, Ariel, and I'm looking at I'm trying to make sense of your buy one call, sell two, or buy one call, sell three. Um, I'm not a huge fan of selling more calls than I own because the infinite risk situation. The margin requirements are fine, probably, but the infinite risk situation in a predominantly bull market, especially, I generally don't prefer to do that because unlike stocks, where unless it's just a piece of shit stock that has no fundamentals and is going to go to zero anyway, I feel like selling naked puts feels safer because I can own the stock and eventually it'll rebound. Might take a while, but most stocks don't go to zero. But a lot of stocks, especially in the strong bull market like we've been in for years and years and years, can infinitely go higher, right? If you would have told me that Netflix was going to be a $1,100 stock, I'd be like, you're out of your mind, right? Because back in 2008, yeah, it wasn't even close. It was a $180 stock, right? I'm sorry, that was, yeah, that was 2022. In 2008, it was a $4 stock, right? Yeah, so I'd be like, yeah, you're out of your mind, right? So stocks can grow to an infinite level of profitability and potential. So naked calls do bother me. So I would not be a fan of selling naked calls, which is more calls than I stand to lose, than I own, or more shares that I own that could cover those calls. But you know, that's just me. Definitely has a risk, only in short term, less than a week, above support, buy one call, sell enough to make a credit, betting on not moving or breaking out. And you could do that, Ariel. And the only risk is, and I know you know this, is the risk of the stock gapping up. Did I expect Path when I got in this week at $12 to gap to 15 overnight? No, I did not. But if I were selling naked calls on something like that, that would bother me. Right. Now that was a bullish outlook, so I understand that's not the right outlook, but you know, stocks can gap. And I don't love the idea of a position I don't own that has infinite risk, which is why I've always been cautious about selling naked calls. Always have been, may always will be. Naked puts don't bother me as much because I've had to own some shares, even if the stock gaps down or drops a lot. I've had to own some shares, and almost I've got a few stocks that have not recovered entirely, but they're not going to zero. I almost 100% of the time those stocks recover. And I'm fine with owning stocks that might take a little while to recover. I cannot afford to short stocks that may never recover and may never drop, right, to the level that I need them to. So that's just my own personal preference. But if you understand the risk rewards and you have a management style and the margin to, I mean, I know that people do it. It's just not for me. That's all. And those are my reasons, right? So that's kind of my thought on that. All right. My kids are going to be like, where the hell are you? You said you were going to be done at 6. Well, it's
Go.
6:15. So I'm going to get
Thanks,
out of here.
Corey.
I appreciate you guys. We'll do this again in 2 weeks. I'll send out an email. If you're not on the well, you're probably on the email list, but I will let you know. We'll do this again in 2 weeks. Greatly appreciate you guys hanging out with me. And if you need anything, let us know. Again, Trader 60, if you're not a member, come on, check it out. We have a lot of fun. And I'll check you guys out. I'll see you guys in the Monday morning options trading room if I don't hear from you in the meantime. Be good, you guys. Take care.